afternoon. Welcome to Midcap Radar. I'm Lata Venk.
What the top headlines were at this stage, but clearly the sugar space is attracting your attention. Srinagar down 28%. Now let's go across to Mehul Choksi of Gitanjali Gems first, who's addressing a press conference, and then we'll get back to the markets.
September 30th, 2011, as compared to 2,510 crores in corresponding quarter of last fiscal year, registering a growth of 26%, with the jewellery segment growing at 40%. For the half year ended 30th September, Gitanjali has achieved sales of rupees 5,763 crores as compared to 4,376 crores last year, registering a growth of about 32%. During the quarter, the group also has registered net profit of rupees 132 crores, grown by 65% as compared to the 80 crores posted in the same quarter of last fiscal year. Earnings per share stood at rupees 15.5 as compared to rupees 9.5 in the corresponding quarter. The EBITDA margin for the quarter was at 7% as against 6.5% in the corresponding quarter, registered a growth of 38%. Our integrated business model is unique in the world. It's a combination of sourcing strength and economies of scale in manufacturing, coupled with branding to offer maximum value generation potential in the jewelry category, as our brands are becoming national chain stores. With the business model, we aim to become one of the world's largest player in the luxury space globally. The momentum in Tier 2 and Tier 3 towns in Indian market has been the biggest contributor to the growth. Besides, we are also looking at a huge potential to unlock value from our Indian branded jewelry business. Recent valuation exercise valued the Indian brands over rupees 5,500 crores. We are working towards unlocking this value for our stakeholders. India continues to excite us with the opportunities. First half has been substantial growth in the franchising business. Not only have stores been opened in the cities like Mumbai, Delhi and Bangalore, but we have traction from small towns like Satna, Aizawl, Kottayam, Hospet, Dibrugarh, to name a few. Gitanjali has been positioned as a brand capital of jewelry in India. Innovation is a key attribute to our company's expansion plans. We have developed multi-brand formats like Jewel Souk, Maya Jewels, and taken initiative like Gold and Jewelry ATM to spread our categories. Besides the transformation from product brand to retail chains, we have seen a surge in demand for our global jewelry collections. We have introduced various designs in the category gold jewelry collections. We have introduced various designs in the gold jewelry category to remain as a preferred jeweler to the consumer in this segment too. First half of financial year 2012 has been significant for our restructuring activity. We are pleased to announce the completion of restructuring of Indian subsidiaries. The international subsidiaries are also expected to be structured within 2 to 3 months' time. We have further reduced to the net working capital to sales ratio from 47% in FY11 to 40% in first half of this year. This has helped in sustaining the borrowing. Our target is to reduce the debt by 500 crores by the end of this financial year. On the international front, our USA chain has significantly grown, both in terms of sales and profitability. We expect to overall jump in profitability due to this. Our operation in the Middle East and Far East have also increased their weight to reach more chains and jewelry stores. Italian brands are also establishing their flagship store in China under Land Oval Park and Stephen Hafner boutique stores. These brands are targeted to cater to the Chinese demand for luxury and further tap the Russian and Arabian markets soon. Our strategy is to focus on emerging markets to drive growth for the jewelry segment. With integrated business model and branded jewelry player, we are confident to expand the top line and achieve even higher bottom line. Thank you.
All right, that's Gitanjali Gems. The stock performance is good, and it's rising after the numbers as well, 1% higher. Target to reduce debt. Their FCCPs will get converted by the end of this year. The conversion price in this case is actually higher, if I am not mistaken. The conversion price was 220 per share, and it's trading at higher than that, by which I mean that things would get converted. So it shouldn't be a very big problem for Gitanjali Gems. All it would mean is that there would be an equity dilution, I believe about 10 to 11%. Otherwise, good numbers from Gitanjali Gems, but very bad numbers from Sugar, Gautam, since you track that those set of stocks so close.